Welcome to the Broken Pie Chart Podcast, episode 371. I'm your host, Derek Moore. With me once again is Shane Skinner and Mike Snyder, or Mike Snyder and Shane Skinner, but they're both still here. Okay. Yesterday, a rocket went up in space. They're going to go around the moon. Pretty cool. President Trump gave an evening nation address. Futures go down. I think the futures at one point were down close to 1.5%. And then somehow we are literally almost unchanged today after all that. So, Mike, I'm going to go to you first. Like, what happened today? I mean, is this just like the market has decided it wants to buy more than it wants to sell? Like it's inverted now. Before we were seeing it sell off as the day went along. Now we're seeing it recover.
Yeah, I mean, based on how the market's been reacting to oil prices, if you would have told me that oil would have, closed at 111 and change, highest closing price, I think in 4 years, that the market would be flat on the day, I would be shocked. And that's exactly what happened. So I think it's a very positive sign that the market was able to be resilient with oil doing what it did. Not only resilient, but being down 1.5% and coming all the way back, really without tech leadership, goes back to the broadening of the market. It's sort of a win if you're a bull that the market was able to be flat here and break the cycle of oil up, market down.
It's this interesting. I mean, I would have thought so. I guess if we opened up higher, I would have said, well, we'd sell off into the holiday weekend because we're recording this on a Thursday. And, the holiday weekend, who wants to be long into the weekend? You never know what happens. But no, it opened down. And like Shane, I don't know it seemed like the future sold off after the president's speech. Like what were they expecting? He was going to just announce, we're done and that's it. And we got everything we wanted and more, and that's it. I mean, look, the futures, as you know, Shane, sometimes there's not that much volume that pushes that around.
Absolutely. The evening session, the morning session, right, when American U.S. markets, right, are closed, their normal hours, right, you can see small amounts of volume in futures move the market significant amounts. And so sometimes those moves get eaten up. And what I mean by that is, you see this huge reaction to something in one direction, and then the following day, the U.S. markets react the exact opposite way, right? You sort of give up the original move that you opened with for a reversal. And, it could be a multitude of reasons why. I was watching the futures and the address.
Watching them tick by tick all night, right?
Oh, of course. I was watching them that whole time. And I think they were like waiting for we've wrapped up operations. And up until the point where it hadn't been made clear is the conversation was sort of heading towards, okay, they're not wrapping up. It would pull back as the conversation would sort of move towards, oh, wait a minute, maybe he's headed for an announcement that this is over. They started to lift up. But, again, the amount of volume that traded during that time relative to the amount of volume that gets traded and takes place in futures during normal U.S. session hours, it just significantly different, tens of thousands of contracts, in 15 to 30 minute periods, different wise. So
it's worth also talking about if you have let's say you have $1 billion book and you said, you know what, I want to take some beta off or some net, long delta, which is a fancy way for saying, I own all this long stuff. How could I take some off? And overnight, I mean, the futures trade on the Globex all night. So you could sell futures contracts. And when you sell them, you're shorting the future, meaning if it goes down, you make money. So you may have $1 billion book and you sell a little bit of futures, and every one future notionally is, right now, about 650,000 represent, of a dollar. So sometimes they just sell some futures to lighten the book. Doesn't mean that, so I think that's, can I tell you guys, like Mike, I don't know what year was this? I don't know if you were in markets. We had a guy, this is years ago. I don't even know why I'm bringing this up. We had this guy years ago, and he told us that he would watch the futures all night. He also said he sat there and smoked cigarettes and watched and drank beer and watched the futures all night. That's all he did. And I'm like, you're probably really tired, but two, like watch a game show or do something else. But the futures, like where the futures are, more often than not, is not where the market opens.
Yeah, I mean, usually it doesn't open like where the futures are. If you're looking late at night or very early in the morning, usually things happen at 7 a.m. Central Time. There's news that's announced, and that moves the futures, and market makers really start to come in and get their books going, and so yeah, it usually doesn't open right where the futures are. You can expect it to be different.
I was really excited because I found a Strait of Hormuz commercial cargo ship vessel crossings indicator in Bloomberg. And I thought, oh, this is great. And then I looked, and it's only through the 31st of March. It's not real time. I haven't found the real time one yet. But that's the other part of this. Like, that's sort of what people are waiting for. But remember what I always say, guys. It's like stuff matters when it matters. Greece, Michelle Crusoe Cabrera did live broadcast from the Greek Pantheon or whatever that formation is, live on scene, talking about the debt to GDP and Greece's debt and all this stuff and risk of default. Day after day, their debt to GDP is worse today than it was then when Michelle Crusoe Cabrera from CNBC was broadcasting live. Like at some point, this doesn't matter and it moves to something else. And that's something else. I mean, here's the other thing. Like Shane, we've talked about valuations. The market is cheaper now. Like, is the market discounted this down enough? 23 times earnings down to what are we, 19 and a half after today? Like Shane, did the market already price this in?
That's sort of what my question has been here is how long does it last, and like has it been priced in? The recovery today, who knows where we'll be next week or at the end of Q2. We'll know then. Your guess is as good as mine. But that I'm starting to wonder that if forward estimates and expectations start to pull back, then yeah, I think that you could argue maybe the market had its correction and now we're sort of fairly priced, and then it's wait this out and see how this further develops. But at some point too, I was listening to a couple of people on CNBC today, and the point was made multiple times by different people that if this really starts to affect the world to the point where nobody can function and things are starting to fall apart, something will get done. And so you're going to not just see the U.S. involved in this. I think there are going to be other countries that step up and try to de-escalate and help negotiate some type of way to move forward from this. And I'm with you. I wonder if that happens sooner or later, what else is there to worry about? And that's the other thing. This big sell-off on this national address last night, what actually changed from what was already known and what was going on? We didn't really get any new information. It was just an update on things we already pretty much.
Well, that I think was the mistake, because if you do an address to the nation and all you do is do an update, like if he wanted the markets to go up, he just sort of kept floating out the same stuff that was being floated out.
Exactly. Right.
Yeah.
Right.
I mean, that's the issue there. I don't know. Let's talk about earnings though. And I want to
Can I just add one thing real quick? Just on,
you can add two if you want.
I only got one, so
okay, give us one.
So we're talking about it. This doesn't matter until it matters, and this is something small, but I think it's just worth noting that there are companies, I think, starting to say that elevated oil prices matter to some extent. Amazon is adding a 3.5% fuel and logistics related surcharge to third-party sellers who use its fulfillment services.
Wow.
So they're at least saying oil prices at this level are, somewhat eating into our bottom line, and we need to pass those costs along to third-party sellers, who I'm guessing are in turn going to pass that along to consumers in some form. So is that a huge deal? I don't know, but it is Amazon, and I thought it was worth noting.
No, that's fair, and it's almost interesting because they've waited till now to do it after the fact. And it's kind of like, this is years ago. I knew somebody owned a gas station. And I said to him, how come you raise the prices? Didn't you already pay for this gasoline? He said, absolutely. But you raise prices when you can raise them in anticipation of having to do something else. And yeah, that's the thing. But it all comes back to earnings. Sam Rowe had something. He pasted this in his newsletter from Sherwood. I sent this to you guys in our chat. An unprecedented divergence between stock prices and earnings. Left-hand side, the y-axis, I know the audience can't see this, but I'm just explaining it to you guys. S&P index price change. And this is the S&P price change, 13-week percent change, versus SPX earnings estimate revisions. So only estimate changes greater than 8% are plotted. So in other words, these aren't like forward 12-month estimates have growth of just under 17%, but they've been revised up 8%. So you look at this and there's divergence. When you have estimates or revisions that are 8% or higher, normally, and I think the most dots on here, normally stocks are up. But here you have the worst decline in stocks with an 8% revision higher in estimates. This is a long way of me saying what we said, we've been saying all along, the article we put out on our site, on our blog, in the news. And this is all multiple contraction. And analysts are raising their estimates. They're raising their estimates into this. And this isn't, people have been listening for a while. No, we've been on this for weeks, but it is interesting. And, we asked the question in the article we wrote, I don't know when that was, 2 weeks ago, to just say, did it decline ahead of earnings revisions lower? Or is the market wrong? Is the market getting this wrong and it's selling off? Or maybe this is just a regular contraction in the multiple. But anyway, I thought this was interesting. And, think about Liberation Day. And I go back to when there is bad news in 2022. Like, analysts kept their earnings expectations, but as the market was coming down, analysts started to lower their estimates. It's the dog wagging the tail or the tail wagging the dog, whatever you call it. So, if you're a bull, so let's take the bull case and we can kind of talk through this. If you're a bull, you're saying markets are cheaper. Mike, you already said that. You talked about that. So markets are cheaper. Earnings estimates are going up. We believe this may pass, this dust up. We believe that oil prices will eventually come down. If you're a bear, you're saying, no, this isn't over yet. This could get worse. And analysts, they haven't had time to revise the estimates. But give me, is there any bull or bear case that I'm missing there? Shane, give me something else.
You got to, so I think that you need to, there's a lot of talk going around about the private credit thing and, the closing of redemptions or the limiting of redemptions, right? And it's an interesting scenario to find ourselves in. I think the biggest question with that is like, is it contained if something were to get ugly in that space? I don't really, I'm not going to make a call on this.
No, I think you should make a call.
Yeah, well, that'll go great with who has to review this. No, I think it's just a matter of, the risks that are out there. Do they stay contained in their own little areas if things start to tip over? Or is there much more broader like contagion risk that just spreads? And the other thing, I don't think the market freaks out if oil is between 65 and probably like 85 maybe over the coming years. I don't know. Oil a little bit higher is that big of a deal. I think oil over 100 consistently starts to, potentially, what you're going to see more of what Mike brought up, right? With Amazon, it's going to get passed on through the consumer in some form or another. But yeah, I mean, the real question for me, looking at all of this, I've been seeing stuff from Bloomberg and elsewhere talking about the slowing down or limiting or canceling of data center projects. Maine actually just became the first state. I don't know if they passed it or if they're voting on it, but I think they passed it. They're limiting data center builds till at least late 2027. And it's because they want to study it more. They want to learn about it more in terms of the effects it has on the environment. They maybe want to give it a little bit more time, see if the technology and the efficiency of building and running and maintaining these, there's some breakthrough that's there, right? That limits,
but you're getting a little far afield though. Like,
I mean, the reason why I go off with the data centers though is because that was a huge part of the, of GDP lately. Has been a lot of stuff to do with data centers. So if there's a slowdown in that's where I think the real risk to like the market is, where the risk to AI and the all
right, let me go to Mike. That's too much information, Shane. That's all right. Mike, reel us back in here.
All right. So, I mean, the multiple contraction, if you want to look at, what's going to propel the market back up, not only to all, previous highs, but beyond that, the multiple contraction, it's really started since before Iran, right? The market was moving sideways and earning estimates continue to go up. So we've had multiple contraction for a little bit. It's accelerated, obviously, with the sell-off here as earnings estimates have not dropped, but the market has. So to me, the question really is what's sort of the driving force that's going to move, tech and Mag 7 higher and help lead back to new all-time highs? I guess that would be the question. Once Iran is over, where's the momentum coming from that's going to propel those stocks higher? I still think that, we need those stocks to lead for the market to make new all-time highs. And even before Iran, that was a concern.
I'll throw in something else. Like maybe this is a bear. Yeah, this could be a bear. Just because earnings are going up in a single year doesn't necessarily mean that the market is going up as well. And there's some nuance to this where you are in a cycle. For example, 1993, earnings were up, I don't know, probably like 17%. But the market was only up, I don't know, single digits. I don't even think it was up 5%. I think it was up less than that. Same types of earnings growth in 1995, and the market was up like over 40%. It matters where you are in the cycle, but sometimes markets just need time to catch up. So, we'll see what happens on this. I also think at what point, so JC Peretz, I mentioned that I think 2 weeks ago, he had a chart of the Mag 7 and he had stated, look, for this thing to really turn around, the Mag 7 is going to have to go ahead, put your boots on, let's go. Let's start getting ready. And I mean, I don't disagree with him. These are big companies. On an aggregate basis, they contribute a ton of earnings to the S&P 500. Remember, earnings are all put in a bucket, all the companies in the S&P 500, and then there's a formula to do a representation of how many shares are actually, combined. So I don't know. I mean, I feel like we're about to, like, if you asking me for the catalyst, it goes to earnings, and it starts pretty soon in a couple weeks. And we're going to get the Mag 7 later on. We'll get Broadcom. We'll get Nvidia later. I'm really curious about Microsoft because I feel like Microsoft has been hit because of it's sort of a warrant on OpenAI because I believe they have some equity there. That's the most interesting one to me. I don't know, Shane, is there a company, like which of these companies are you most interested in hearing from?
I'm wondering if you're staring at my screen through your end because I have a chart of Microsoft pulled up this whole time. Weekly chart. We're sitting basically on the 200-week moving average, and I don't think that's something that really happens very often in a name like Microsoft over the past 25 years or so, right? If you had bought this stock back in, it looks like we're sitting at November, the week of November 6th of 2023. You're pretty much at break even right now. So, the idea of owning Microsoft right now in April of 2026 at a price it was at back in, November of 2023, that to me, it seems like there's some people that are just going to justify buying it simply because on a technical level, it's been beat up so badly, right? And I think you're right. Is this a punishment for OpenAI and maybe not enough of a return as quickly as expected? Possibly, but it's Microsoft, so we'll see how that plays out. I don't know. I
mean, if you look at a weekly chart, and I like weekly charts too.
Yeah.
You would say that the April, you're kind of getting towards, maybe you bounced off the April 7th, a couple weeks there. You look at a chart though, you would say it may have come down to support. And the weekly chart, pull up like a 3-year weekly chart. It's got your little Garfield pattern, by the way. I know the one you like, the cat ears, the two tops. So I don't disagree. Like I think you and I are on the same page. Microsoft is interesting. And I also want to hear with the stronger dollar, if there's any mention of that affecting earnings. I don't know, Mike, what do you think? Which stock do you most want to see the earnings? Like, which do you think is the most important here? Or just you're looking forward to?
Nvidia, always. It's the largest company in the world. They sort of touch a little bit of everything, and I think they give a really good broad picture into what's working, what isn't. And I agree. I think we just need to hear these companies talk and see their earnings and their forecasts at this point. It's been a little bit since the previous earnings cycle, and we've really just gotten bad news in between. And so, I think that could be the catalyst to move the Mag 7 higher again.
It's almost surprising that since July, so it sort of ran up into July of last year. And it broke out to 212 at one point, close today, 178 and change. But it's sideways. It really is sideways. And earnings continue to go up. It's the same thing dynamic as the market, but can I change my vote? See, Microsoft and Nvidia are so far apart. I know it's only, 5 weeks apart? But now I'm almost thinking I want to see Nvidia more.
Oh,
I want to see them both.
Yeah. They're in tandem, right? And then I'm going to be the odd man out here, and they had them recently. I'm excited for Oracle, man. It's another one. It's sitting right near its 200 week. But it's just been really beaten up. It's been punished for, I think, some of the debt stuff they've got going on. And, I'm not saying that I think it's going to see lower levels from here. But at the same time, I think there's some genuine concern about what's going on with some of the financing on that side. So, that's going to be a fun one to watch through the rest of the year and just see how they evolve.
In September, it's all-time high 345.72. It's 146.38. It is nearly 200 points lower than it was. Like, you look at that chart and it might as well have been the tulip bubble. Not to the same scale, but
that's the textbook, like, you know what chart I'm talking about, right? Mm-hmm. Where they plot every level. You get the fake out in 2025 around there where it looks like it's coming back down, and then it bounces, and then you get the peak, and then the disbelief, right, where it just for it looks like 2-3 months there, just straight down.
There's the what Shane is talking about for the audience is there is a bubble chart, and there's these different phases. I'm going to try and find it right now, and if I can do it on the fly, I'll do it. But if not, I'll do it from memory. And so basically, you have the stealth phase, the awareness phase, the mania phase, and the blow off phase. And basically, it's kind of like the smart money gets in, institutional investors get in. There's a takeoff, there's a first sell off, but it's not really that bad. And they call it a bear trap. And the bear trap just means, everyone says this is done. I'll short it or I'll just be out. And then you start to get media attention. There's enthusiasm. The public comes in, greed, delusion, new paradigm, comes down, denial, comes back up, return to normal, comes down, and it's the bull trap. You get fear, capitulation, return to the mean, and despair. And then at some point, people get religion and they just pray to get back to break even. I believe I took that from one of Jack Schwager's books.
I've never heard that last part. That's awesome.
And you find religion. So, But if you look at any bubble chart, it's sort of the same. And I'm not saying the Oracle was in a bubble. I'm just saying if you trace, and you know what chart I'm looking at, and the audience can Google it, phases of a bubble chart, and you look at Oracle, you'd say, you have the first sell-off. You're right. We have the gap, and that was news. We had that huge gap up. The public is buying it. They're buying it at highs. The new paradigm, and comes down. It's it looks the ride down looks a little bit different than a normal bubble. And it is at support. Look, I don't know. None of us know what's going to happen with this one, but okay, it's fair enough. That's a fair point. I think Tesla too is an interesting one because they're trading on such a high valuation. And look, it could trade at a higher valuation. It could double the valuation. But that's an interesting one to me because I wonder if some people are buying that thinking they're going to get a piece of SpaceX.
Well, did you hear the rumblings of a potential SpaceX IPO?
No, Mike, it's more than rumblings. Mike, didn't you say that they did a silent filing? So they did what do they call it? A private filing? Mike, you had said something. And that means they don't have to disclose.
Yeah, I didn't say that, but that's what they did.
Well, you could have said it. If it's smart, you could have taken care of it.
That was me.
Yeah.
Yeah, I talked to Elon.
So that means they don't have to disclose finances to the public. They'll do that in an S-1 filing. But they filed, Mike, right? As far as I know, to the SEC.
Yeah, that's what I read. And yeah, Shane, I did hear that there's rumblings of one day it being one company so that Elon can, equally be involved in all pieces of it. But I don't know. I mean, I don't know how that happens.
The merger of the century. I mean, that's what that would be if that happened, right?
Could you imagine, guys, if you're like, they're asking for investors to buy out Twitter. Sure. I'll put a little money into that. It's $44 billion. He's probably overpaying for Twitter. Renames it X, does XAI, and then all of a sudden, apparently Twitter and XAI are going to be part of the SpaceX. I think I don't know how Twitter fits with SpaceX, but XAI, I believe, is going to be part of it. Is that right?
I think so. I can't speak 100% on that, but I thought I saw that, and that opens the door. He's got a bunch of other private companies, right? He does a bunch of different stuff. So
I did
you would
read.
think this.
I did read that I think they're going to only. So the valuation is thought to be 1.5 trillion. At least that's what some of the media reports are. But I think I saw that they were only making public something like 100 billion of the stock. So not that much.
Interesting.
And there's something to be said though with, so if that's true, if it's 1.5 trillion and there's not that much stock available, what does that mean for index inclusion? Because the S&P does look at public float, which is a weird way. Remember when Warren Buffett sold shares, the index actually had to buy more because it raised the public float. I don't know if you guys remember that.
I didn't know that. That's fascinating.
Yeah. All right. Where else do we want to go here? Mike, what about high yield and rates? Like, what happened to the high yield spread? I think we've talked like high yield. Sometimes you look at that, and if the market's selling off, but high yield isn't, you're like, who's right, who's wrong? I don't think spreads are really blowing out, are they?
No, it seems like they've been fairly stable. I did want to just make one last point about SpaceX. If you want a good idea of sort of what the market is thinking of it ahead of its IPO, and I'm not saying you should buy this, but if you just sort of want to follow it, there's a mutual fund that Ron Barron put together. The ticker's BPTRX. I believe about 30% of the fund, it's between 20 and 30% of the fund is SpaceX. So they privately own SpaceX, and it's in this fund. And I mean, the fund it's down year to date.
What's the ticker? I haven't heard of this one.
It's BP, P as in Paul, T as in Tom, R as in Ray, X as in X-ray.
All right. Oh, you know what? Did we talk about this like a year ago?
Months. It was quite a while ago, but yeah, I think there was some hype around it originally when like this first started getting talked about, like what, 6 months ago at least.
We did talk about this on the show.
Did we?
It's coming back to me. Yeah. So this is this Barron Partners Fund retail shares?
Yep, exactly.
Yep. I think we did this last fall, Derek.
Oh, we may have. Okay, so it's still, yeah. So its all-time high was like 259.80 or something like that. Is that right? And then 259.40, and today it's I don't know what it closed today. 240. How much SpaceX do they own in it?
According to their holdings, this is as of the end of February. It's 32% is SpaceX, 21% is Tesla. So it's all in on Elon.
The thing that's tough, like I don't know enough. Shane, it's jarring my memory that yes, we did talk about this probably, but the thing is when a stock comes to IPO and it has a valuation, like that's usually they're trying to get as much of a valuation as possible. Because often insiders are, creating liquidity and they want to offload shares, and the investment banks are they want to have it come out as at the highest price possible because their fees are based upon that, and they want to. It's going to trade where the market demand is. But I always worry. I go back to my Snapple example in the '90s where everyone's like, "Oh, I can't wait to buy a Snapple because this thing's going to take off," and like it's already pricing in everything that everybody knows about it. So, I don't know enough about this vehicle itself, but
yeah. Well, who knows? Who knows what's gonna happen, right? You have some names that IPO, they tank, then they recover eventually. Sometimes they tank, they never come back up. Sometimes you would think that over the long run, Elon would hope that this thing succeeds, does well, creates value, and the stock obviously grows because of it. I mean, I don't know. I don't use Starlink. I know people who have, and
I know people who swear by it.
yeah, that's what I'm saying. The people I know, right? So this is where it's like,
I will tell you, on American Airlines,
yeah,
their Wi-Fi is not great. I hear people who fly. Is it United? They use a Starlink, and they rave about it. That's what people tell me.
right, right. So as we head into the future, who knows what's going to happen? But look, we just sent a mission to the moon again. After how long?
I think that's pretty cool.
I mean,
I gotta be honest with you. I watched it.
My kid got to, like, it's pretty crazy to think, right? It's been generations since something like that's happened. So, I don't know. The biggest question is, how does it become profitable? And I'm sure that there are plenty of ways within defense and intelligence and data and multitude.
Well, no, they got to file the S-1. So if anyone doesn't know,
Right.
there's a document called an S-1. And an S-1 is when an IPO is coming out. That's the company, they release their financial to the public. It's in the S-1 filing. And also they sort of list the potential risk, and they disclose a bunch of stuff in there. And I know we've talked about WeWorks before. WeWork was really hilarious to a lot of people because they created an S-1 that was very stylistic, but it had a lot of just stuff that didn't make sense in it. So I guess, yeah. So like, if you ask me which S-1 I'm like, do I want to see OpenAI's or SpaceX? And I kind of want to see both of them. I don't know if OpenAI is going to come public, but I think the interesting thing though is, if a company like SpaceX goes public, and let's say it has a market cap of 1.5 trillion. So at what point does it qualify to come into the S&P 500? And just to give our listeners a little primer on this, it's got to be a U.S. company listed on, one of the U.S. exchanges, which it will be. The market cap, I don't know if they really have a minimum market cap, but I've heard right now it's roughly around 25 billion or so. They have to be positive earnings. So I think the deal is the recent quarter has to be profitable, and over the last 4 quarters, they have to be net profitable. And then also there's a liquidity thing, which is why I brought up the thing if they're not making too much of the stock public. And I don't know that for sure. I read that somewhere. It could have been some guy in his basement writing that. So take that with a grain of salt. But the liquidity has to be good enough. And I think it has to do with the float adjusted market cap. So I don't know if they don't put enough. But that would be interesting, because I'm just thinking right now, if we say top 10 S&P 500 companies, market cap, like where would that put it? And they don't list it here. Like, what's number 10? 10's probably Walmart now, right? So let's see what Walmart's market cap is. You guys don't know this offhand, do you? I can look at it. I know you've memorized all the market caps of all the companies.
I skipped my studying this week. I'm sorry, Derek.
Yeah, well, give me 2 seconds.
1 trillion. Derek, it's sitting at right at 1 trillion, basically. 1.00 is what I've got here, roughly. Okay. 994.48.
Okay, so now let's go to Meta. You know where I'm going with this. I want to see where it would slot in. And Meta, which is number 6, yeah, it would be ahead of Meta as of today. They're 1.45 trillion. So you're talking about someone who would be the 6th largest company in the S&P if they were included in the S&P.
I don't know if that's going to happen. That'd be pretty incredible.
I mean, why not? We don't know if they're profitable yet. I mean, we'll see it with the S-1, but why not? And here's the issue. Normally, when a company comes into the S&P, it may have grown to get there, but if it comes in and it's already valued so high, like it is,
Right.
Yeah.
What's the ceiling then at that
It's a
point?
big shakeup for the index.
Oh, it is. Yeah. No, for sure. Google. So it would be ahead of Broadcom too at 1.5. So you're talking about it would be fifth? No, sixth. Anyway. All right. It's just it's an interesting exercise.
Absolutely.
All right. So we've stopped making our predictions because apparently we were pretty bad about it, or at least I was, where the markets are going to be next week. And we got we're doing this on a Thursday. We've got the holiday this week. It wouldn't surprise me if the low is in on the market. It also wouldn't surprise me if we make new lows from here. That's why our message to people has been, we generally, in the core thing we do is we've got people in markets, and then we've got some protection built in. And we don't try and trade or time the markets. But if you're asking me based upon the price action, and Mike, to your point, I think it was sort of bullish that into a 3-day weekend when there's no trading, people bought into the decline today. So it wouldn't surprise me next week if we don't have a couple % up move by the end of the week. What do you think, Mike?
I agree. I think this was a real positive day, even though the market was basically flat. I think it's showing resilience and saying that it can move higher, even if oil stays at these levels. As long as the situation doesn't get worse. I think if there's more news, obviously that's a different story. But yeah, I could certainly see it moving higher.
Shane, what about you?
Yeah. I mean, I think it comes back to what we were saying earlier in the podcast. Is some of this stuff been priced in? Things calm down, and the worst of this, in terms of prices, maybe a little bit of inflation, nothing crazy, and a little more expensive gas for a little while. I think the broader economy that was growing prior to this conflict continues to do so.
Inflation is going to print headline CPI because that includes food and energy. Obviously, energy, I'll bet you on an annualized basis, it probably comes in like, I don't know, 3.6 to 3.8, something like that. And the market may not even care.
Right.
Because that's old news at this point. As long as this gets wrapped up fairly quickly. So the fact that all three of us agree means the Costanza trade, and George Costanza had that episode for the Seinfeld episode that he just does the opposite and it just works. Like whatever he's going to do, just do the opposite. So that's the Costanza. Like the Costanza trade then would be to like short the market,
or hedge, right?
Well, I mean, we're having fun here. No, I mean, if we're actually talking real dollars, it's of course we're hedged, right? In some of the stuff we do. But the fact that all three of us agree that the market likely closes higher next week based upon some of the price action in the last couple of days tells me, it's going to be done. Anyway, all right, let's get to recommendations. Let me see. Shane, you get one.
Yeah. I'm going to maintain so far a soft buy on Born to Bull. Got episode 1 done. There's a couple more. And it's just interesting. It's an interesting look. I wrestled, and wrestling's not a big sport that's necessarily the most popular, but it's got a dedicated community. And it's sort of the same thing with bowling, right? It's sort of niche, not the most popular.
That's right. Bowl, like bowling, not bowl.
Bowl. Okay. Yes, bowl. BOWL.
Some of the accent there.
The
Chicago.
Middle. Yeah. Sorry about that. But no, it's been interesting so far.
All right, I'll give mine, and then Mike, you can give yours. So last night I turned on Netflix. Sometimes you watch a preview, and then if you watch the preview long enough, it just kind of goes into it. So I watched this movie called Number 24 on Netflix, and it's about Norway's most highly decorated resistance fighter during World War II. It's based on a real person, Gunnar Sonsteby. I'm not butchering this person's name too bad, but was really interesting. I thought I like those types of movies, and if you do, I think you'll enjoy it. I think it was well done. So I'm a strong buy on it. I'll go strong buy. Mike, what do you got?
This is a pre-recommendation.
Oh,
I'm going to watch it this weekend, but I can't see it not being good. The Peaky Blinders movie. So this was a series. I think there was 6 seasons of it, which I really liked. And then they just came out with a movie. I think it came out a few weeks ago. That's supposed to wrap up sort of the series with Cillian Murphy. So
I've heard good things about the series, but it sounds like I don't want to watch this until I watch the series, right?
Oh, for sure. I don't think you can watch this without watching the series.
Okay. How many seasons is this and how many episodes per season? They used to be like 25, right?
I think it's 6 seasons.
Oh, boy.
And
you're asking a lot.
I think it's like 8 episodes a season.
8 episodes. Okay, that's not too bad.
It's worth it.
I told my wife to watch The Wire, the HBO show from, that goes back to the 90s. And that's when they did, like 25 episodes a season? And there were like 8 seasons. She's like, you got to be kidding me. Same thing with Breaking Bad. She started to watch that. She's like, seriously, like how many episodes do I got to get through? I'm like, just do it. It's good. So.
The Wire is great. McConaughey. This is my younger brother finally found that. He's a senior in college right now. And
Are you thinking about True Detective?
Or I'm thinking True Detective, not The Wire. You're right.
Oh, that was great. That him and Woody Harrelson did the first year.
That first season is just incredible. Sorry. That's another one that
that's a great recommendation. Yeah, if people haven't seen that. So each season of True Detective is different, but it's the first one with McConaughey and Woody Harrelson. Yeah, that is like expert level acting, series, drama, the whole bit. Fantastic. It's a gritty series too. Like, I'll put the parental warning on that one for sure. But that sequence, I'm not going to give away anything here, Shane. But the sequence when they're off, they're in those neighborhoods by the oil plants, and I think it's outside of Houston.
Yeah, in Texas. Oh, yeah.
It's like one continuous shot, and I don't want to give too much away, but that was incredible.
Yeah,
the whole season. Okay, yeah, that's a good one. Okay, see, I let you have 2 this week, Shane.
Snuck it in there.
You snuck it in there. All right, that's it. And national championship, is that Monday or Tuesday? No, Final Four is this weekend, right?
It is.
I think it's Tuesday, right?
Okay, hang on. National championship. Now we got to look it up. Look, people could look this up on their own, but we'll do this for them. It's really more for our benefit. So the Final Four is Saturday. Okay, and then let me see here. Date.
It's Monday. It shouldn't be that hard to find that date. It really shouldn't. Google should be better at that at this point.
Okay, so it is Monday. Okay, so my wife is a U of A alum, Arizona, so she is. She's definitely rooting for them, and I will, of course, support her in all her endeavors. So, all right, guys, have a good holiday weekend. We'll catch up with everybody soon. See you, everyone.